Welcome back. I'm Pratap here. Today is 7th November 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab post. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. Here you have a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at the Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other very important updates we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report we identified 9 high liquidity zones from daily and 75 minutes time frames. We got a good number of trades executed today. The first one is UPL. This is a 75 minutes high liquidity zone. It is a rally, 2 base candles and a drop candle. This is what our software identified. And this 75 minute zone fine tuned with 15 minutes time frame. See here you have a rally, base, drop. This is the 15 minute zone. Again we need to fine tune with 5 minutes time frame. And here the structure is not good. But here where the actual origin has started here. Here we have a drop, 2 base candles and again a drop. This is a 5 minute zone as an origin to this entire 75 minutes high liquidity zone. Of course it is also having a fine tuned zone, 15 minute zone also. So it's overlapped with this entire high liquidity zone. So definitely this is the area we have a very strong order flow is available. And today prices entered into the zone. This is today morning 9:15 5 minutes candle. But trade is not at 9:15 1 minute candle. It is at 9:19 candle. I'm going to the 1 minute time frame. Now you will get the clarity. See here. So this is at morning 9:19 candle. In this candle, prices entered into the zone and then started moving up and finally it reached the target zone at 10 o'clock 50 minutes. The 15 minutes target zone. Here we have a 15 minutes target zone. We have a drop base rally. So and reached the target. And how much profit UPL has given? Let me open the Excel sheet. UPL has given 10,530 rupees profit, which is 7.6% ROI as per one futures margin cost. So this is an excellent trade in the early hours of the market and trade is completed by 10 o'clock 50 minutes, 5 minutes candle. Okay, and the next one is RBL Bank. This is also a 75 minutes high liquidity zone, a supply zone. So this is the one. We have a drop candle, 1, 2, 3, 4 base candles and then again a drop candle. This is what our software identified. And this zone fine tuned with 15 minutes time frame. Here you have a 15-minute zone, you have a drop, base, drop. Sorry. We have a rally, base, drop. This is the 15-minute zone. This is the 5-minute zone that I will explain. And also here also there is another 5-minute zone and planned for this is aggressive trade setup that I will explain. This is a rally, base, drop. Again fine-tuned with 5 minutes time frame. And 5-minute structure is not good here. The reason is this is looking like rally, base, rally, and then prices came down. That means rally candle, drop candle, in between no base candles. But interestingly, there is an order flow. From there it picked up the order. What is that order flow here? This is the one, 5-minute zone. This is the 5-minute zone as an horizon. We have a ERC candle, you have 3 base candles and a drop candle. That way considered. You can also consider drop 1, 2, 3, 4 base candles, 5 base candles drop. If you are not convinced this is a leg-in. That way also it doesn't make much difference. Slightly the risk of the zone will increase like this. But anyway, I am convinced that this could be considered as a leg-in, 3 base candles and drop. And this 5-minute zone is the origin for this entire 15 minutes fine-tuned zone. Definitely this is the area you have a strong order flow and already tested 2 times. And moreover 15-minute zone is created by picking the orders from this area and prices came down. That way we can plan a trade in this area. See, today prices entered into the zone and sharply it came down. Morning at 10:15, 5 minutes candle reached the target at 10:30. That means within 15 minutes, entire trade is completed. And after that, prices again moved up. And it is our bad luck. If it would have moved a little more up to this area, we would have taken a second trade and our target could be even more. Why a target could be even more? Because this is already pierced here. Previously when we got the entry, sharply see how sharply it pushed the prices down and immediately reached the 15 minutes. Slightly pierced. So definitely prices will be moving to the next zone. This is the next zone. We have a drop, base, rally. This is the way you can consider. This is the way you can draw the target, next target. And actually today prices entered into this area. But slightly we missed the trade. Some more up, if it would have moved, few more points. See, what is our entry here supposed to be? 176.17 paisa. And what is the high of this candle? 175.79 paisa. Maybe 37 paisa. We missed the entry. But anyway, we got a successful trade. RBL Bank reached the 15 minutes target. And how much profit it has given? RBL Bank has given 6,425 rupees profit, which is 5.4% ROI as per one future's margin cost. Excellent profit it has given. Okay, the next one is Hero Motor Corporation. And this is a daily high liquidity demand zone. Let me go to the daily time frame. This is the one. We have a rally candle, 2 base candles, and I think no, this is the rally. Why rally? Some hidden body is also added. That way, this candle is qualified as a rally candle for the software point of view. 1 base and 1 rally candle. And this is the daily zone. This daily zone is fine-tuned with 75 minutes time frame. Drop, 2 base candles and a rally candle. This is the 75 minute zone. Of course, in the recently prices entered more deep inside. A new 75-minute zones also created. But before I will explain, first let me complete this, how I fine-tune. This is at the time of zone creation, the fine-tuned zones were created. After that, in the recent price action, again fine-tuned zones are created. They are the new order flows. This is the old order flow. So drop to base candles rally. This is the 75 minutes fine-tuned zone. Inside 75 minutes, we have 15 minutes fine-tuned zone. See here, you have a 15-minute zone. You have a rally, you have 3 base candles, and again a rally candle. Rally, base, rally, 15-minute zone. And at the distal line, you have a 5-minute zone. 5-minute zone as an horizon to the 15-minute zone. So here, you have a rally, base, rally. This 5-minute zone is the horizon to this 15 minutes fine-tuned zone. So this is the way we plan the trade in this area. See, recently prices entered into that area. The 5-minute zone as an horizon to this entire 15-minute zone, fine-tuned zone. It picked up the orders and again started moving up. And again prices came down and again started moving up. In this process, new fine-tuned zones are created. Now let me again go to the 75 minutes time frame. See, recent time when prices entered into this zone, picked up the orders while moving up, it created a drop, base, rally. This is the 75-minute zone. This is the new order flow in the recent time. Drop, base, rally. Within this drop, base, rally, we have two 15-minute zones. We have a drop, base, rally. Again, you have a rally. 4 base candles. Of course, medium size leg candle is also part of the zone. So that way 4 base candles, again rally. Drop, base, rally, rally, base, rally. And we have two 15 minutes fine-tuned zones. Within these 15 minutes, so you have two 5 minutes zones on each 15-minute zone. See here, you have a rally, 2 base candles and rally. And currently this zone is working as a high liquidity zone. Why high liquidity zone? Let me explain. But before that, you have a drop, 2 base candles and a rally. This is a fresh fine-tuned 5-minute zone. But before that, we have a high liquidity zone. If prices has to get into this area, this high liquidity zone has to be violated. Why we are saying it could be? I'm not saying this is a high liquidity. This could be a high liquidity. The reason is multi-testing. Prices moved up and again came down, picked up the order, sharply moved up. See the rejection. Again, once again came and once again it sharply moved up. So exactly in this area, there is a strong order flow. And again after that, prices again came down and again sharply moved up. And after that, with a gap up, again prices moved. So definitely we can consider this as a high liquidity zone. Okay, suppose if this is violated, one trade will be, the risk is also small. That there is nothing wrong in trying, because high liquidity zones, what is the characteristics? Continuously take the trades as long as it gives you the opportunity. One day it has to be violated, that day your order will be stopped out. Until then you will enjoy the profits. So that way today also prices entered into this area. But before prices are entering into this area, this is supposed to be our 15 minutes target. We have a rally, base, drop. We got a very good order up to here, from here to here. But unfortunately, what happened? Prices entered into this area. After that, generally what happened? Prices sharply go up and moving up until this 15-minute zone. But today, a new 15 minutes zone is created once after it picked up the orders. While picking the orders, this is definitely a big red candle. Generally what happens, your trade will be executed, sharply it will go up. But that didn't happen. Prices came down and then the candle is closed. The moment candle is closed, then immediately drop, a new 15-minute zone is created. But by the time you already took the trade, so you can't avoid that because you are already in trade. What you have to do, you need to revise your target. Of course, you won't get RR, but earlier, before taking the trade, you have the RR. That's why you took the trade. Once you took the trade, whether RR is there or not, whatever it is, you have to exit. No other choice. If you think this 15-minute zone will violate and prices will move up, it may happen, it may not happen. That is purely luck-based. Today it didn't happen. So that's why whatever the profit it is, you have to accept. Maybe the RR may not be there, still you have to accept because already you are in the trade. If you are not in the trade, you would have avoided this trade because RR is not there. But that is not the case. Already you took the trade. After that, candle is closed. After that, this drop is confirmed. That's why you have to revise your target to this drop. And in this candle it reached, but before that, prices slightly pierced this high liquidity zone, very slightly. Of course, it is within the stop buffer. Just slightly. A few points. Almost negligible. But even it will be within your stop buffer. But after that, prices moved up and reached. Suppose if prices once again enter into this area, you cannot take a trade because this zone is pierced. That means the high liquidity lifetime is gone with this candle. Your next plan should be on this particular area. But today, prices did not reach into this area. Within this area only prices were moving entire day. Because of this new 15 minutes target, we got less profit. Okay, fine. Hero Motor Corporation, we got 3,262 rupees profit, which is a 2.5% ROI. Generally, intraday traders, 2% ROI is extraordinary for them. But high liquidity zones, generally we get around 5 to 6% we will bet. Average ROI is 6%. Many times between 5 to 6% we get. But 2.5 we have to accept this, whatever the profit we got. But trade is completed within 15 minutes time period or half an hour. Let me check. You got the trade at 10 o'clock 40 minutes, 5 minutes candle. And your trade is completed at 11:10, 5 minutes candle. That means within 30 minutes, trade is completed. That means in 30 minutes, we got 2.5% ROI on our investment. This is at 10:40. And the next one is Bajaj Auto. Bajaj Auto trade gave in 9:15 1 minute candle. That's why it is for many people the trade would not have been executed. The reason 9:15 candle, intraday traders mostly they will avoid. Even some people take a risk. Trade execution in 9:15 candle is very luck. By the time you place, prices would have come. Even if it is executed, then how much profit you would have got. That is what we are calculating. Who knows? A lucky person, if any one of us is a very lucky person, this trade would have been executed today. And first of all, it is a 75 minutes high liquidity zone. We have a rally. Sorry, this is the one. Failed ERC candle as a leg-in. This failed ERC candle is considered as a rally candle because prices were moving up. That is the way software considered this candle. 1, 2, 3 base candles and then a drop candle and then follow through candle. So this is Bajaj Auto's 75 minutes high liquidity supply zone. This one is fine tuned with 15 minutes time frame. Here you have a rally, base, drop, 15 minute zone is there, and then again you have a drop, you have 3 base candles and a drop candle. You can also consider compromised leg out candle. This is the way also you can draw, because this is a majority of the portion is outside, I mean half of the portion. That way also you can consider drop, 2 base candles, drop candle and follow through candle. That way also you can consider, because this is also a big candle, ERC candle, but looks like failed ERC candle, looks like. But definitely 40% body will be available here, the bigger large candle and follow through candle. Either way you can draw, because our concern is within this area, at this proximal line of the 75 minutes high liquidity zone, that area we are having interest to plan our trades. Okay, in this area again, this is the 15 minute zone. Within this 15 minute zone, we have a 5 minute zone is available. So we have a drop, you have 3 base candles and drop candle. Failed ERC candle as a leg-in, 3 base candles, drop, or maybe you may say this is a leg-in candle, these 2 are base candle. It doesn't make any difference whether you consider this as a leg-in or you consider this as a leg-in, it doesn't make any difference. The same base. Slightly it is having overlapped outside the zone, slightly. Okay, fine, because risk is very, very small outside the zone. So you can plan your trade. And today price is morning 9:15 candle. Let me go to the 1 minute candle, you will get clarity. See, today morning 9:15 candle price is entered, and somewhere here with small entry buffer your order would have been executed, and then sharply it came and reached the target, 15 minutes target. When it reached 15 minutes target at 9:57 or 9:58 candle. This is morning 9:15, almost 45 minutes your trade would have been completed, but execution of this trade is a question mark. Will it be executed? If it is executed, you are a lucky person, because sharply it went up. Really it went up because of order flow. Yes, mostly your trade will be executed. Suppose if it is a freak trade, your trade would not have been executed. That's why many people, the reason why they avoid in the 9:15 is because of these freak trades. If it is, suppose if the prices actually moved up because of the demand and supply, it moved up, probably 9:15 your order would have been executed. No doubt in that. So that's why I'm saying this is a lucky trade, if any trade. Morning 9:15 trades are not practical. But we are registering in our Excel sheet, even if it is stopped out, we are registering, because at least they are the opportunities. Maybe it is not a practical trade for you, but high liquidity zone's point of view, it has provided an opportunity. Maybe the opportunity could have been a successful or failed, because I remember previously 2 trades we registered in our Excel sheet, they were stopped out at 9:15 candle, morning 9:15 candle. Even then we considered them as a stopped out trades previously, I think last month only. If you look into the last month HLQ zone analysis video, you will understand. Okay, if anybody's trade would have been executed in Bajaj Auto, you would have got a profit till the 15 minutes target zone. Let me show you the 15 minutes target zone. This is the one, failed ERC candle as a leg-in, or even this is also a failed ERC candle as a leg-in, a base and rally. And a trade would have been executed, completed in 45 minutes. How much profit we would have got? 16,050 rupees profit, which is 11.2% ROI from here to this 15 minutes target. If anybody's trade executed, definitely you are a lucky guy, because you got a very huge profit from this stock. But unfortunately, it is a 9:15 minutes, 1 minute candle trade, this one. Because the 9:15, 1 minute candle only, price entered into this area. And we got one more trader, that is Page Industries at 12:30. Today, at 12:30, we got this trade. This is again a 75 minutes high liquidity zone. See, today zone is violated, but before that, we got the trade. First, how we fine-tune this zone? This first 75 minute zone. This is a drop, base, drop, drop, base, drop. This is what our software identified. And this one I fine-tuned with 15 minutes time frame. Here we have a clear 15 minute zone, rally, base, drop. Excellent rally, base, drop. Within this rally, base, drop, we have a fine-tuned 5 minute zone. We have a rally, you have a base and drop. Rally, base, drop. And in this area, we got the trade at 12:30. Today around at 12:30 or 12:40. And moreover, target, 15 minutes target zone. Here you have a rally, base, rally. Actually, our earlier target could have been this one. This ERC candle as a leg-in, rally, base, rally. This could have been our earlier target. And this is the revised target the moment it got the trade. And after that candle is closed, this revised target, rally, base, rally. Okay, even revised target also we got a good RR. We have 1:6 RR is there from here up to till this 15 minute zone. But what happened? Slightly before reaching, the trade is completed and started moving up prices. And by the time it already gave 1:5.3 RR it has given. I know many of you will exit either 1:3 or 1:5 levels, especially those who are beginners. So because it is slightly above 1:5 level, most of you, because generally 1:3 achieves, we are considering the trade. Even though it is failed to reach the 15 minutes zone, if it is having minimum 1:3 RR, we consider that as a successful trade. And moreover, this trade is having 1:5 RR. Excuse me. So 1:5 RR is there, 1:5.36 RR is there, till the low of this candle. So what is the maximum opportunity it has given, that I am calculating. I am sure some of you would have exited at 1:5 RR. Some of you might be waiting for even 15 minute zone, and probably after that prices were moving up, and one of the 1 minute trailing stop loss, you might have exited your trade. Those people would have exited here. Because just before reaching the 15 minute zone, if prices were started moving up, mostly people will exit. This is a rally base drop, so probably you would have exited here. Trailing stop loss or a little above with some stop buffer, a little above, you might have exited. Maybe somewhere here, let me say, because it is stopped out in this candle. If that is the case, you would have got only 1:2.65, you might have achieved, that's it, because of trailing stop loss. Okay, whatever it is, according to us, it has given 1:5. It is 1:3 is a successful trade, and it has given even 1:5 RR, this particular trade. But failed to reach this 15 minute zone, slightly it failed. There could be a reason, because many of you might have kept at 1:5 RR just before this zone, 15 minute zone. Because of that order flow, it might have got again some more extra buying support, and prices were moving up. See, once again it entered into this zone. Second trade, we can't take the trade. The reason is, first time prices went deep inside. See here, prices went deep inside. almost close to the distal line it went. So it's a high risky, because next time there are higher chances this will be violated. Of course, but it didn't happen. Once again it went, came down. This time it gave 1:3, actually it achieved. From here to here, 1:3 RR achieved. And then prices were moving within this area, and finally here it is stopped out. Something happened to market in this area. Maybe some news might have come to the market. I'm thinking like that. Generally such kind of situations, some sudden moves will be there. See how sharply it moved up. Let me show you 1 minute chart, you get clarity. See, suddenly it is become a very big green candle all of a sudden. Complete zone is violated. Then again sharply prices came down. Maybe some profit booking would have happened here. Sharply came down again in this candle. Maybe here, somewhere here, some buying support it would have got. Again sharply moved up and reached up to here and again came down. So a lot of volatility happened. And finally, market at last 1 hour or maybe last 50 minutes, market was started moving up and finally closed outside the zone. I'm sure some news would have released in the market. At the time only you see such kind of price actions. But remember, the news impact will be temporary. See here, temporarily it moved up, moved down, moved up, moved down. After that slowly it settled and then prices were moved. Maybe the news is a positive news. Finally it moved up and closed outside the zone. By the time, because already it consumed the order flow in this area. That's why it went deep inside. And the Page Industries has given 1:5 RR. We have achieved 1:5 RR. For 1:5 RR, it has given 4,691 rupees, which is 3.9% ROI, based on one future margin cost, almost close to 4% ROI, close to. Some 3.93 or 94 is there, ROI. So these are the successful trades from today. And there are few more zones, so we didn't get any trades. In that, one is CNX, that is Nifty, Fin Nifty. The Fin Nifty is a daily supply zone. Drop base drop, and this is today's candle, prices didn't enter. And here I didn't find a proper order flow in this zone. Mostly this zone will be violated. This is also having a daily zone is also available. Rally, 4 candles and rally. It is moving between these two zones. Look into the 75 minutes. You have a zone, 75-minute zone. This is a failed ERC candle. You can use this as a leg in. 1, 2, 3, 4 base candles and a drop candle. It's like a drop base drop. Now again fine-tuned with I want to fine-tune with 15 minutes, but 15-minute structure is not good. Why 15-minute structure? Let me hide this gap, you will get clarity. See, this is looking like a drop base rally. So this is the reason why I couldn't. You can also consider rally base drop, but somehow I'm not comfortable with this candle. That is the reason why I didn't drop. So anyway, prices did not enter into this zone. And next one is Indian hotels. This is also a daily high liquidity supply zone. So we have a rally candle. You have 1, 2, 3, 4, 5 base candles and a drop candle. This is what our software identified. But I don't know how many of you remember, previously once we got a 75 minutes high liquidity zone here. This is the one I fine-tuned earlier. Let me go to that 75 minute zone area. This 75 minute zone is overlapped with this daily zone. Previously our software, because this by the time when I draw this zone, this is already 75 minute zone is there. And this 75-minute zone exactly fit inside this zone because it picked up the orders from this zone and came down. This rally, 2 base candles and a drop. This 75-minute zone is overlapped with this daily zone at the distal line. And this is the one fine-tuned earlier. This rally-based drop 75 minutes and a 15-minute zone inside. I didn't find, but I have drawn 5-minute zone. Maybe for an aggressive trade setup, I might have drawn that. But I will show, or maybe high liquidity zone, whatever it is. But I will show you that. But before that, here we have again a rally-based drop is there. Inside the 75-minute zone, recently created zone, rally-based drop. And this 5-minute zone is overlapped. Here you have a 5-minute zone, rally, 2 base candles and a drop. Probably this 5 minutes is the origin for this entire daily high liquidity zone. And moreover, that zone is also acting as a high liquidity zone because of multiple testing, rally based drop. It is an origin to this daily zone, and also it is also a high liquidity zone because of multi-testing. Here also it tested, came sharply. So a lot of order flow is there. That's why daily zone was able to create high liquidity zone from this area. Even in this zone also 15-minute structure is not, 5-minute structure is not good. This is the 15 minutes area. But this entire 15 minutes area origin is this 5-minute zone. So because of that, the trade plan is within this 5-minute zone area. See, already it is tested once. In the recent time also it is tested here. When happened? 21st October. And today also our trade plan in that area, but prices didn't enter into that area. Look into the daily time, today's daily candles. See, multiple times, see, this area prices entered and it pushed up to the daily zone. From the daily zone it came up and up to this 5 minutes area, and again it came down. And the next one is Naukri. Naukri is also a daily high liquidity supply zone. We have a drop candle. We have 1, 2, 3, 4 base candles and drop candle. This is what our software identified. And within this area, fine-tuned with 75 minutes zone. So this is the one. Leg-in. Not this one, this one. This is the leg-in, considered as a drop candle, 3 base candles and again a drop candle. That way I have drawn the fine-tuned 75-minute zone inside the daily zone. Within this 75-minute zone, again a 15-minute zone I have drawn. So rally, 4 base candles and again a drop candle. And 5-minute zone structure is not good here. Let me show you. Because the risk has been increased. Because this happened from morning 9:15 candle. So that's why, because of heavy risk, I didn't draw this 5-minute zone. But I found the order flow is in this area. This is the drop, 2 base candles and again a drop candle. And from this order flow, recently the big push happened from here. And trade plan is in this 5-minute zone. This is the 5-minute zone as an origin to this entire 75 minutes and also 15 minutes fine-tuned zones. This 5-minute zone is the origin for both these fine-tuned zones. 75 minutes as well as the 15 minutes. So this is the area our trade plan, but unfortunately prices didn't get into that area in today's trading session. So that's why we didn't have any trade on Naukri. And the next one is INFI. The last stock is Infi, because the Infi we didn't get the trade. This is a 75 minutes high liquidity supply zone. This is the one our software identified. This is the failed ERC candle as a leg-in. You have 1, 2, 3, 4 base candles. This is a drop, base, and again a drop candle. This is what our software identified as a high liquidity zone. And this 75 minute zone is fine tuned with 15 minutes time frame, and there I found an order flow. We have a drop, base, and a drop, base, drop. This is the 15 minutes fine tuned zone. Inside this 15 minutes fine tuned zone, we have a 5 minute zone. So this is a ERC rally candle. You have a base candle, and then you have a drop candle. So this is the way we identified the order flow here. But today we didn't get any trade opportunity for Infosys in this area. So these are the high liquidity zones identified from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.